To truly appreciate dividend investing, one must understand the relationship between the dividend cash payments and the dividend yield. Over time, we call this the yield on cost. Using our familiar Canadian bank example, we know predictable and growing earnings create growing dividends, which in turn results in higher stock valuations and wealth. This is simple enough, but the average investor doesn't find it easy because there are too many emotional forces at work, making it difficult to put into practice. Understanding the simple math of dividends can go a long way to combating these emotions. In late 2008, this stock was trading at about $50 per share and paid a 50-cent dividend per share per quarter. For $50, you could buy 50 cents of cash flow every 3 months. Annually, your $50 share will provide you $2 of income. This creates an investment yield of 4%. What is more, however, is this 50 cents per share is likely to grow. Even better, your total return on your investment will grow as the share price also rises. Then, panic hits. Fears of a recession, the media wanting to sell bad news has us convinced we should all sell our shares as they plummet to $30. But stocks are traded in a market. There are buyers and sellers. For every seller, there is a buyer. True investors are willing to buy these stocks at $30 when they are confident the dividend will remain at 50 cents per quarter and eventually increase again. For the investor who buys or buys more stock at $30 does not have a yield of 4% like the investor who bought at $50. Rather, because the yield is calculated by the dividend paid per share, the $30 stock paying a 50-cent dividend or a $2 per year creates a yield of 6.67%. That is a good investment on its own, assuming the share price and dividend remain unchanged for years. But as we have seen, the dividends increase over time. By the end of 2019, this company's dividend increased to $1.08 per share. Our $2 per year dividend is now $4.32. For the investor who bought the right to this cash flow for $30, our yield on cost has increased from 6.67% to 14.4%. This investor bought shares a few years ago that now yield 14.4%, and this will continue to increase as the dividend rises. When the share price corrects like it did in early 2020, the yield will increase and not decrease. The magic of yield on cost is lost in all the statements and conversations about investing. One reason why we forget is because this bank's share price at the end of 2019 was trading at $103.55. When we see our investment statements showing a $103.55 share price and a $1.08 dividend, we see a dividend yield of only 4.17%, and we forget that we only paid $30 for that $4.32 of annual income. For more information on who we are and what we do, please contact us at blackburndavisfinancial.ca.